What's up, guys? It's Pac. Welcome to the May 2nd, 2024 NQ market review. We're going to be doing these market reviews every single day for the month of May. So if you can go ahead and hit that like and subscribe button, we'll get right into this. Let's get it. So right here we have price pulled back to right at open on May 2nd. These two blue circles, this is our 1 minute structure. So as you can see, after that dump from FOMC from the previous day, we were stuck between this range. So when this occurs, all you have to do is track internal structure. You can track internal structure. So you would track all the highs and lows, and these may not be exactly accurate that I'm drawing right now, but for example, you just track all the highs and lows within here so that you can find trades when you know that you're range bound. You just have to know that we have a bottom of a range somewhere down here, and then that we end up having a top of a range somewhere up here. Okay, so getting right into it, we're going to keep in mind that these drawn blue circles with the drawing tool, this is internal structure. So if we do break out either the high or low, what happens to all this stuff in here? All this stuff in here becomes non-structural. Doesn't mean that we won't get bounces out of it, but it means that we're not expecting it to hold price down, and like let's say it breaks down, we're not expecting it to hold price down and put in a new low. We're expecting it to get ran. Why? Because it's all non-structure, because our only structural points are these two blue, lighter blue circles. All right, sweet. So we're right here at open. We had a bullish order flow. Again, bearish order flow. Again, order flow is just internal structure. That's all that is. So we have this here. We have a breakdown there showing bearishness. We had a fail to close up here, a double top. So that's why you run these internal lows. We have this completely unmitigated zone down here. So right on open, my first expectation was for us to dig down into this zone. That was something I was talking to with the people that I trade with, and that's exactly what we were talking about. Is I would expect it to come down into this zone. So we'll see what happens. We have go ahead and mark these out here. That's our open coming up right here. Make that a little skinnier. It's kind of hard to see. You can see that market, shifts up into our origin here. I believe it hits just about 50%. If we use the right candles, hits 50% of the origin and trades right down into that box that we were expecting. Why were we expecting that? Well, because we have these relative equal lows right above our zone. When you have relative equal lows right above a zone, that is your liquidity that we're looking to purge. It's very, very, very clear and precise there. So we're just tracking structure. You can see that we did have a breakdown here. So we had a new zone form here. And it's from the low of this candle up there. I'll make this blue. We did have a new zone form there. And you can see it bounces again right off 50% of that and gives us a new low. Now, did we put a valid low in between these four candles? No, because what candle did we have to close above to get a valid low? We had to close above this one. And when you have large candles like this, it's likely just to use the imbalance to push it down. It's likely just to use the imbalance to push it down. And you see we dig deep and we run straight through this zone and wick it out. So when this occurs, we're expecting some reaction out of this zone. It looks like we get a tap right at the top, which is where our SNDR actually lied, which was right here. This was our SNDR, so that's why we bounced off of that area there. And it looks like with all the momentum and volatility, it just wanted to run that out, which is perfectly okay. Why? Because remember, all of this is still non-structure. It's non-structure because it's internal of our actual structural points. It's just your order flow. So when that occurs, a lot of the times your unmitigated zones will get wicked out more often. Why? Because they're not structural. So we get that reaction here. We put in a valid low here once we close. Boom. So we're expecting price to maybe trade up a little bit higher, or once it gives us a valid high, we would expect it to do what? Continue and take out that low. So there's your valid high. So we start be looking for shorts, and lo and behold, there you go. It takes out that low. Very, very simple trade idea there. Very, very simple trade idea. Why? Because it put in a valid low, then it put in the valid high, and then it retraced and traded down. So it looks like you have a little bit of a range occurring here, which is totally okay. So how would you play the range? You'd short the top of the range, you'd long the bottom of the range. And it looks like that's exactly what occurs. So look, now we have another breakdown, right? Now we have another breakdown and we have a new zone. Where's our new zone? Our new zone lies at this low here and at that high here. We have a breakdown the moment it closes this candle. Well, why not the wicks, Pac? Well, we don't use the wicks because this doji candle did not gap down, so this is a brand new swing and it failed to close, and we don't use failure swings as our highs and lows on the time frame that we're looking at. So we have that new zone. Let me mark it. Let me get rid of these old zones that have already been used, because remember, we don't use old zones, not old S&DRs or anything like that. There's always something new to use. So we'll put our new zone there. And you see we just kept trading down. Failure to put in a valid low. When you wick those candles out, especially if you get 2 wicks, a lot of that times it tells you want to trade a little bit lower. So let's see, do we finally get a valid low? No, not yet. All right, we finally get a valid low. So what I'd be thinking here is possibly being stuck in this range here with these 2 large wicks, but most likely I would like to see it trade at least up into there, and if not, trade this high, because what would this high be? This high would be the liquidity right before you tap into a zone, similar to what I was talking about at market open with that zone there. So it taps right into it. Let's see if it takes it. I think it took it by a tick there. Let me clean this up and we'll see. Yep, it took it by a tick there. It took it by a tick there. So that's the liquidity we were looking for it to purge. It purged it. If it puts in a valid high, what are we expecting? We're expecting everything to get ran. If it puts in a valid high, we're expecting everything to get ran. Boom, there's your valid high. And look at that. Everything gets ran. Again, a very simple idea. Like I talked about yesterday, when we're in certain flow, what are we expecting? We're always expecting continuation until it fails. We're always expecting continuation until it fails. So what do we have now? We have a brand new zone right here and the high here. And we will draw that zone out there. Remember what this purple line down here, I'm going to change it. Remember what this red line down here is. This is the bottom of our range, right? This is the bottom of our range. Make it thicker. And we just are pushing and pushing straight down. And what do we get? We get a valid what? We get a valid low. It occurs there. So what's the expectation now? The expectation is possibly trade up into this previous zone, and or once it puts in a valid high, we expect it to do what? Run the low. So there you go. There's a valid high occurs. So what are we expecting? We're expecting it to run low, and look at that. It gets smoked. And now at this point, you see how we closed below this red line. What does that mean for us overall? What does that mean for us overall? It means that we have now shifted structure again to the downside. Actual structure, not all this internal stuff. Remember, what does that make all this stuff now? It's all non-structural. It's all non-structural. Doesn't mean that you won't get bounces from the unmitigated zones. It doesn't mean that we can't utilize these internal swings. But you have to know that this is now a new swing. It's now a new swing. So we do have internally, we're still going to be tracking that because it's such a large zone. And so what do we know after we run zones like this? We know that there's most likely a trade what? Back into the previous range. I was talking to the people that I trade with, and I said, okay, since this is all non-structural, We cannot be surprised if we get some sort of V-shaped move back up. Why? Because this is a higher time frame swing. We have a bunch of non-structure sitting within our zone. That means that that's most likely to give us a pretty strong reaction back up. Most likely. Because remember, if it comes back into this zone, what does price like to do? It likes to sweep non-structure. So where's all that stuff at? All that stuff is really up here, so you can't be surprised if price wanted to push all the way into the 622s. It just can't be something that's surprising to you. So once we get a valid low, we should be starting to push back in. We're pushing back in. We do have a previous zone here. Even though it's non-structural, we know that there can still be reactions of unmitigated swings. Okay. Looks like you may have possibly gotten a 1-to-1 there, depending if you drew the zone correctly. I'm not sure if I drew the zone correctly. There you go. Let's see if you got a 1-to-1 occur. There's your 1-to-1 occurs. Nice. Now, you have to know that if this is our last internal swing and we shift this high, that means order flow internally has now shifted bullish. That means we would be expecting prices to start doing this until we got up into our previous non-structural high and take it out. Okay, so we shift structure there. What does that mean? It means that we should only be looking on the bullish side of the market until we take out non-structure, a significant non-structural high. So if I go up to the 12-minute, I can guarantee that these are significant prominent highs that are easy to spot, that anybody can spot. So we're back into a previous zone. We're going to utilize this as our internal structural zone that we just formed. So if we trade back into here, what are we looking for? Buys, right? Buys. That one looks like it delivers a 1-to-1. Very nice. It's not digging back into our zone. I don't think we got a valid high here yet. Nope, we still didn't get a valid high on the 1 minute, so price still needs to push higher. Okay, there's your valid high that's occurred. And let's see if it just taps right into our zone. Boom, right back into our zone. So what are we looking for? We're looking for longs here. Why? Because this is the SNDR of our zone, this purple area. So we're going to start looking for longs. So if we get a valid low, you are golden to go. That kind of rhymed. Boom, valid low occurs. So now what should we be expecting? We should be expecting this high to get taken. We should be expecting this high to get taken. Why? Because we're in bullish order flow. We're in bullish order flow. And there you go. Again, a very simple trade idea. And a lot of you would say, well, how do I get involved? Well, look at this. I don't know if it misses it by a tick. It looks like it just misses that valid low by a tick. And that's okay if I drop down to my 5-second chart and I go back here. What I can do is I can utilize my second valid low on the 5-second, wait till that one occurs, wait till this one occurs, and then I can utilize that to find trade entries. It doesn't always have to trade to 50% for you to find a trade entry, especially when we're moving fast. Because remember what I previously said, I wouldn't be surprised as this V-shapes back up. What is this kind of looking like right now? It's kind of looking pretty mighty aggressive back up. Looks mighty aggressive back up. So we have a swing there, a swing there. So now we have a new swing point. We'll move this up. We don't need this one anymore. It's irrelevant. Don't need this line anymore. It's irrelevant. Boom. There you go. You have this here, and it looks like that candle. So we'll use this low right there and that high. Okay. So again, it's bullish order flow. So we're only looking for bullishness, knowing that all of this is non-structure. We're not trying to short this back down to oblivion. Why? Because it's all non-structure. It's all non-structure. So it looks like we do get a tiny swing formed there, a valid high and a valid low. And we're still bullish. We have a valid high, valid low occur there. And as you see, price just continues to push up. Until we get a valid high, price is going to push up. Cool, there's a valid high. You're into this tiny swing here. Okay, we're into this really small swing. There's a really small swing here. When you have swings like this, if price decides to trade through it, are we expecting this to be the flip? No, because it's flipping into an unmitigated zone. So we'd expect it to be fake if it decides to trade down into there. Okay, we traded down into there. Are we looking bearish? No. Why? Because it's a fake flip. It's always going to be a fake flip if that's the case. So we're going to expect bullishness to come out of this area. So now that we have a valid low that just occurred on this time frame, right around the 50% area of this zone, I am looking for bull. I am looking for bull. That's it. And if I get stopped, I get stopped. But I'm saying that this is the area that I would be looking for longs to come out of. And look at that. Lo and behold, we have longs come out of it. So again, we have structure. This is our low, by the way, that we would need to break to have continuation. Okay? That wick. Why? Because there is a gap. You can see it right here. There's a gap right there to the downside. So continuation would occur there. Valid low is still this candle. They had to confirm that candle. Why? It's essentially one candle. It's just essentially one candle. Just keep that in your mind. When it has the gaps, it doesn't move this to be the valid candle that's low. Now, if this gap candle had closed below this prior wick, then yes, it would be that candle. But since it didn't, these are basically one candle. It's basically one candle. Okay. And we closed above this high. So we have continuation bullishness. Continuation bullishness. So we get a valid high occur there. So we're expecting price to trade back into this previous zone. Right there. We do have our SNDR right here. So if this doesn't put in a new high, what are we expecting? We're expecting it to trade back down into origin. Where would origin be? It would be these valid candles. It would be right here. This would be our origin. This gray zone. So looks like SNDR is failing. So it failed. So we're going to expect it to trade down into origin. That's what it does. And we should also be expecting when this occurs, there's always a state of range. There's always a state of accumulation. Why? Because there's failure. Failures equal state of accumulations. And as we're in there, if we get a valid low within here, then we possibly could start looking for longs, knowing that we might be in a stage of accumulation. It looks like that closes right on that wick. Yeah, it closes right in the wick, so we haven't had a valid high occur yet. Okay, we have a valid high. Okay, we have a valid high that's occurred. Again, when it fails, there's always a state of accumulation. So especially when you have these sharp moves, see how there's all these bullish candles and all these bearish candles? A lot of the times what it does is it engineers liquidity to take that out and then go. So there we are, back into the bottom, hit, it looks like it used the 70% or 30%, then the 70%, put in a valid low. And it looks like that's exactly what we got. Boom. So again, this was never bearish. It was always bullish. And I want to bring something to your attention because this is something that I talked to somebody about yesterday. If I had used this wick right there, because I didn't realize the gaps, I didn't understand the significance of the gap, would we not have switched bearish right there because of the closure? So if we would have switched bearish there, then I would have been trying to short from this area. And I would have gotten smoked. Why? Because we never switched bearish, and that's something you have to pay attention to. You have to pay attention to those gaps and how they form. So we have a high here. We have a low form here. And now we have a new zone. And again, we're still bullish. And the reason that none of this stuff is holding it down, again, is because it's all non-structural. It's all non-structural. It's all non-structural. So as we just keep pushing up into the end of the day, Remember what I said the overall target would be when we were at the bottom? I said it's probably going to be these highs up here. Why? Because that's the only non-structural highs that we really have on a higher time frame. So we had a new high get put in here. Let me go and mark that out. We had a failure, state of range, state of accumulation, and there you go. Final target achieved right at the end of the day, 210. So we have a new zone, forms here. And again, we're just looking for, even though it's hit target, we're just looking for bullishness, so it tells us we don't want to. Bada boom, bada bang, new high, new low. It's still occurring, still pushing up. And I believe that we end up just, at the end of the day, we end up just, you know, having a little bit of a pullback maybe into this zone. But the target's already achieved. So when target's achieved, you can expect some sort of accumulation to start to occur at some point. Okay, so we have some more zones. I'm just going to keep tracking our structure. But you see, if we were just on the bullish side since we took that low, how easy trading would have been? It would have been so simple. It would have been so simple. And looks like a little accumulation there. We do break down there. Maybe. Actually, it might have not given us a... It's closed right on it, so it hasn't broken yet. Okay, it broke now. So now we have a flip. We have a bearish flip here. But again, we're looking for some sort of high time frame accumulation, so don't be surprised if this just trades right back up to that. And it's just kind of doing its thing. It looks like it does... Nope, didn't put one in there. It did put it in a valid low here, but it never closes below, so there's no swings in here. And trades right back up. And there you go. You're at the end of the day. Just like that. So keep in mind, when we have these higher time frame ranges, you follow internal structure. You follow internal structure. It closed out here, so we technically could have had a protected high here if that's what you wanted to use. I've just seen a lot of times that this ends up getting ran, especially when you have these completely unmitigated 12-minute. I think it was like your 12-minute valid high was up here. It was completely unmitigated, so a lot of times this gets ran. A lot of times. So many times. So keep that in mind. I hope this helps. See you guys tomorrow.